She says a European country, but also we look beyond Europe. Now, this strikes me as interesting because none of this is new in any way. Being a global country and doing global business would normally not start with leaving the EU and going nationalist first. That would not be a necessary step to take. And also, Britain, of course, has always been trading globally, as every other country in the world pretty much does as well. So there was not much new in that speech from as opposed to what we have already known in the last couple of hours shaping up there. It is going to be a hard Brexit, and at least one thing is sure and one thing is good. We have clarity on that now.
Yes, clarity on that now, but of course, a confidence building. The pound sterling is making a bit of a comeback against the US dollar as we speak. So it looks like, well, this is one good news we're having on this particular day. But if you look at what the incoming US President Donald Trump has been saying about the automakers, not just in the US, with the Mexico to the south, but also across the Atlantic to the Germans on the other side of the world. The economy minister for Germany, Sigmar Gabriel, says, well, if you want to produce better cars in the US than BMW and Mercedes, you come get us. You got to produce better cars, as it were. Looks like these car wars have started. Yes or no, Lars?
Yes, I mean, look, this was an offhanded comment that Sigmar Gabriel made. It was actually quite funny, of course. It was in direct response, obviously, to Donald Trump saying he was complaining that there's a lot of BMWs driving around on American streets, but there are no Chevrolets driving on German street. Now, what Trump apparently did not even know, and that is quite funny, is that General Motors, who owns the Chevy brand, has actually stopped selling Chevys in Germany in support of Opel, the German brand that is also owned by General Motors. So whether there's any Chevrolets driving on German roads or not has nothing to do with German policies. It has nothing to do with German buyers. It is actually a strategy decision made by General Motors in right there on the American side, of course. So there's a lot of nonsense here, as we have heard from Donald Trump before, and Sigmar Gabriel coming back with a very good response. But to the bigger point here, of course, the United States gets a lot of product from other countries, from Germany. It imports a lot, and it does not export a lot of industrial goods, for example, but it does export other things. It exports technology, and so it's not like there is no balance at all. Maybe there's not an even balance in America between import and exports, of course, but that is not because all the other countries are evil and they're abusing America as a partner. It's just the way industries are structured, and he will have to get a grip on that situation at some point.
Yes, Lars, a good car is a good car any day, isn't it? Whatever, on what soil are you driving them? A good car is just a good car. I want to drive a good car, whether it's German, American, made in Nigeria, whatever, but very important, let's go to Davos and get a sense of today's trading. Give us 1 minute of how things are shaping up there. Of course, the Chinese President Xi Jinping has made some statements there. He's taking the limelight, as it were. I'm not too sure if the outgoing U.S. President Barack Obama is attending, but of course Donald Trump is not making that show. So the Chinese are the ones having a great time there in Davos. What's going on there? Talk to us about a minute.
Yeah. Well, it's quite interesting. Of course, yes, China is taking the limelight there. It is the first time ever in Davos that a Chinese president has been in attendance. The Chinese delegation is bigger than it has ever been. And his speech was a huge highlight of the day here, his opening speech. And Chinese President Xi, he presents his country here in his speech as a stalwart of an open economy. He talks a lot about free markets, free trade, and of course, creating with that a slightly awkward situation, because of course, as much as he talks about that, the world knows that China is not an entirely free market. The companies are not, the economy is not entirely free, and also it is not currently doing that well. The Chinese economy is not as strong as it has been, so it's a little bit of a tricky situation right now. The timing, at least, is very bad for the president to make announcements like that, but of course it also tells us something with looking, of course, at the the United States again, that we have to have a Chinese president talk about free trade, and in this case make an argument for free trade, and have an American president-elect talking against free trade. I guess that is really interesting how things have changed here over the last couple of months. The worldview has basically been put upside down.
Okay. Last, let's leave it there for today. Thank you very much for bringing us up to speed. What's making the rounds around the world, as it were, from car to whatever, and the Davos, Switzerland, WEF forum taking place. Last halter for our DWTV for Channels Television financial correspondent there at the Frankfurt Stock Exchange. Look at weakness among petrochemicals producers, sending Saudi Arabia stocks lower, while Qatar was buoyed by its banking sector. Look at some of the intraday numbers from the Middle Eastern markets as we speak, largely in the green, with the exception of the Saudi Arabia standard wool market, off track or down by 0.5%, down now at 6,824, about an hour and a half ago. Qatar is making some strong gains there. You can see that 1.35%. So what does it look like? East Coast, United States, early morning hours, before the opening bell. Look at the stocks futures index, the three major indices, the Dow Jones futures, the S&P 500 futures, as well as the NASDAQ futures for the composite. And you can see some negative opening there, a little bit of a pointer to weak opening. But those numbers are getting slightly better about 20 minutes ago. Okay, let's get on with the Carlyle story regarding the group in South Africa. The Carlyle Group, this is a U.S. buyout fund, has agreed to become the largest shareholder in Johannesburg-based Global Credit Ratings, looking to broaden the Pan-African ratings agency services. The terms of the deal is yet to be disclosed. Meanwhile, Carlyle is set to buy around half of the equity in GCR from its management, founders, and German development finance business, which will remain invested in the company. GCR sells about 400 customers across 20 countries, and the only rating agency to have a strong presence in multiple geographies across sub-Saharan Africa. We'll be back after the break. Still to talk about the market and the CDC Group in the UK getting across to us about their investment on the African continent in the last 5 years.